Prateek Agarwal is by joins in to talk about the fundamentals of the market. Prateek, hi, morning. How would you explain the fall that we've seen in the last 5 trading sessions? Is it just profit taking because the run-up was as well as swift, or do you think you could blame it on crude price escalation and the worries that it springs up?
No, I think it is the former. We had gone up too fast, too soon, and let's put it this way, that to the target index levels of most of the houses, the upsides from the peak levels were less than 5%, and that too to be realized over a period of a year. So that had almost certainly happened. In fact, high crude prices and high markets typically would happen at the same point if the rally is liquidity driven and not fundamental driven. So over the past 3 years, we have seen most of the rallies being primarily liquidity driven, and hence crude and the market would seem to have a very high degree of correlation. So I would not want to believe that high crude prices led to a sell-off in the market. While when the market was moving down, people may have looked at high crude prices to justify it. It's more to do with the fact that we just went up too fast, too soon.
Prateek, morning. Nikunj also joining in. Prateek, the month of March will be a tricky one for us. We've got outcome of UP elections, credit policy, union budget. So at portfolio level, how are you planning to hedge, and what will be your portfolio strategy in the month of March?
Nikunj, it depends on what level the markets are at. If the markets were where they were a few days back, one would have reasons to be worried, because there was a degree of hope getting built into the market. Now after the correction and maybe a few percentage points down from here, the hope part gets out of the picture once again. So, the elections are state level. Things were in a particular manner before the elections. Worst case, they stay the same way. Okay, just to give you a context. I think it's kind of given based on whatever the central bank people have been saying in terms of direction of interest rates and liquidity infusion. It's just the pace that we are discussing. Given the fact that media covered reports, carried reports on how the team was split in terms of cutting interest rates last time around itself. Hopes are that this time around we would get a rate cut in March itself rather than wait for April. So all of those, I think, inspire a degree of hope rather than despair at this point in time. And more importantly than that, what is also happening is on 29th of this month, you have the second tranche of LTRO, which will probably work its way into the system the same time as the election results and the other uncertainties like the budget hit the market.